Equity markets started the budget week with solid gains on Monday as supportive global cues and anticipation of a populist budget drove investors towards the Lal Street. The S&P BSE Sensex surged over 1,000 points to 58,248 levels, while the Nifty 50 index moved 300 points to 17,407 levels in intraday deals. The indices, however, ended at 58,014 and 17,340 levels, rising 814 and 238 points respectively. As all eyes will be on budget proposals today, let us look at past data to know if equities could rally post the budget or will they see profit booking. An analysis by Business Standards Research Bureau shows that 38 budgets have been presented since 1991. Markets on their part have risen and fallen almost equal number of times. The Sensex index has clocked a post-budget rally 50% of the times, while the Nifty index has ended in the green 58% of the times. Meanwhile, market reaction to Modi government's budget has largely been positive. Stock markets have mostly rallied strongly post the union budget and have risen 58% of the times. This time around too, analysts expect bulls to give a tough fight to bears. Let us go to Gaurang Shah, Senior Vice President at Geojit Financial Services, to know what the markets are baking in.
Over the last couple of years, I think slowly budget, the significance that was there earlier is fading away.
Okay.
So it is a 2 day before and 3 days prior. The budget. 2 days before in terms of anticipation and 3 days post budget in terms of understanding what is the fine print.
So if markets were to rally today, should one sell on rise?
According to just a brief from what the Honorable Prime Minister said before going into the Parliament, before the economic survey was submitted, that India is well placed in terms of its growth trajectory and the government will do whatever necessary to keep it that way and increase the run rate of GDP. Now, if you have to go by that very small statement that the Honorable PM made, it gives you a slight indication that possibly there is something good out of budget expected. But this is just all wishful thinking, to be very frank with you. And not only budget, Puneet. Post budget also, I think there is a lot that we have to see.
Sure.
So if you are a short to medium term investor and if you bought stocks only with budget in mind, then sell the rally tomorrow.
According to the annual economic survey tabled in the Parliament yesterday, India has the fiscal space to do more to support the economy, poised to wrest the title of the world's fastest growing major one from China and keep it for at least another 2 years. Moreover, according to the document, gross domestic product is expected to grow by 8 to 8.5% in the year starting April, after likely expanding 9.2% in the current year. If one is to take cues from the economic survey about today's likely proposals, then the government is expected to drive growth by widespread vaccine coverage, gains from supply-side reforms and easing of regulations, robust export growth and availability of fiscal space to ramp up capital spending. Given this, Sampath Reddy, Chief Investment Officer at Bajaj Allianz Life Insurance, says, the union budget to be growth-oriented with emphasis likely to be on sectors like manufacturing, healthcare and infrastructure. Given the government's commitment towards climate, we expect the electric vehicle segment to get an additional boost with specific incentives for the charging infrastructure. Moreover, as the direct and indirect tax collections are picking up, we expect the government to achieve its budgeted fiscal deficit target of FY22. The government has already announced National Monetization Pipeline, PLI schemes and increased outlay for capex, and we expect that the thrust to continue going forward as well. Overall, today's proposals will be the key market drivers over the next few days, with stock-specific action amid Q3 results and global cues swaying indices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.